Do you think the bull market in India, which let's say started in April, May 2020, that's over now?
I think from the longer term perspective, the trends are still very positive for the broader market, and we still got upside targets of 20,700 to 20,800. But we have mentioned before, that it's not uncommon for the Nifty to spend a number of months, if not years, trading in a range. I mean, you can go back to the 2010 to 14 scenario that you consolidated the gains of the 2009 lows before you broke out in 2014. And then you saw a similar 12-month period between 2015 and 16, where the market digested the gains following the breakout from 2014. And currently we're pushing on to 16 months of a ranging period, and that could extend for another 6 months at the very least, but it doesn't alter the longer term structure, which remains bullish.
Laurence, I wanted your take regarding a couple of these sectors which have been defensive and underperformed, pharma and FMCG. Do you see the risk reward being favorable, and would you be suggesting a long or a positive recommendation on these two sectors?
Well, I think in relative terms, at least the fast-moving consumer goods side does give you that relative outperformance that you've seen. And the reason why that's been generated is that the sector's managing to hold up in a higher range. The pharmaceutical side, unfortunately, that remains in a downtrend. Yes, we have had a rebound over the past few sessions, but the broader trend is down in both absolute and relative terms. And, one of the sectors we've been highlighting as take profit or sell has been the auto side. We had great outperformance last year. That's rolled over, broken down. So we'd continue to recommend reducing exposure to that space. And another sector where you're at least getting some relative outperformance currently is from the IT side. That's not because you've seen a breakout in absolute terms, but it's the trading range that you've seen there at least generate some relative outperformance.